Welcome to the monthly wrap up. Looking at the Indian equity markets, it has been volatile for the last month. Not only India, but even globally, we have been witnessing a certain level of volatility. Indian equity markets delivered a return of negative 5.23. Globally, also, we saw major indices being down. For instance, Nasdaq was down by almost 4.54%, Dow Jones was down by 3.8%, Nikkei was down by 2.2%, and Euro Stocks was down by almost 6%. A combination of the COVID third wave, rising inflation, interest rate hike expectation were some of the major factors, in addition to the current Ukraine and Russia standoff that has been a major reason for this volatility in the past month. Looking at the current situation, the Russia and Ukraine standoff, markets have generally overreacted in terms of short term during such geopolitical risk. But over a longer term, these short term volatility does not seem to have had a very long-term impact on the market. For example, even during the Iran and Kuwait war that was there, the markets fell by almost 17% and the oil prices doubled. But equity markets were back to its peak level in the 4-month period later. We expect the Ukraine and Russia standoff to continue in some form or the other, and one should closely track the development. However, an investment decision needs to be taken on the fundamental and long-term equity view that is there, as opposed to the short-term volatility that is witnessed. We believe that the probability of this flare-up spreading to other regions in the world is very minimum. Markets also seem to have already digested the fact that the current situation, and on the contrary, any diffusion in the situation would also act as a good catalyst in terms of a very sharp up movement in the longer period. The last couple of months, as we said and we saw, has been challenging for the Indian equity investors, also for global equity markets. In India, we saw Nifty 50 showed a very small correction, and the broader markets also have seen a very higher drawdown across sectors. Looking at the key data points, FIIs were net sellers to the tune of 45,720 crores, while DIIs continued to maintain their positive buy on the market and were net buyers to the tune of 42,088 crores. Corporate earnings too have been very strong in the month of December, and the outlook going forward is also expected to be strong. The union budget that was presented by our finance minister on the 1st of Feb also harped on the fact that growth and sustainable growth is what the entire budget was framed on the backs of sustainable growth and ensuring that the deficits were lowered. All in all, we believe that the current correction should be used as an opportunity to be invested in the equity market rather than to be fearful. We continue to remain positive on the longer term for the Indian equities. A near-term event that one can watch out is the state elections that are going to be starting, especially the one that is having an outcome in Uttar Pradesh. For investors who are invested in investing via equity, can start their investment process in mutual fund. We have our mutual fund baskets that one can invest in basis their risk profile and the time horizon that an investor wishes to. You can log in on our app, that is MF app and portal, and have a look at it for yourself. Thank you.